This is a Yahoo Finance special, Crypto in 2023. Prices of cryptocurrencies are surging this year. Bitcoin is up around 40%, with other popular digital assets like Solana up even more than that. That's a big turnaround after last year's crypto crash, when the speculative bubble burst as the Fed spiked interest rates. Now, investors are hopeful for a hot crypto summer in 2023. But there's a lot still weighing on the sector. The Fed's aggressive rate hikes, a slew of bankruptcies, the aftermath of the collapse of FTX, and the criminal case against dethroned crypto king Sam Bankman-Fried. Over the next hour, we'll examine the future of crypto, including the best trading, investing, and tax strategies. And the big question, what will take us to the next crypto bull market?
Hello and welcome to this Yahoo Finance special, Crypto in 2023, brought to you by Intuit TurboTax. I'm Rochelle Akufa alongside Brad Smith. So, of course, after a tumultuous 2022, three key themes are unfolding in the early part of this year as investors continue to pick up the pieces of a tarnished sector. Now, firstly, the regulatory crackdown is gathering pace. Crypto firm Paxos ordered by a New York state regulator to stop creating new coins for Binance's stablecoin. Now, this as it reportedly faces a lawsuit from the SEC for offering the coin in the first place.
The prevalence of stablecoins continues to be a theme that we're watching, whether it's fiat-backed stablecoins or the algorithmic versions. The fiat-backed type are expected to continue to dominate developed markets. As ever big issues as there is a lack of any clear, coherent regulation here, Rochelle.
I mean, that's putting a lot of people off doing what they do with exchanges. So finally, storage, of course, then becoming another key area. Security, obviously top of mind, but the type of facility you use will be based on your individual needs. Now, hot storage is an app connected to the internet, while cold storage is done offline.
Now, crypto didn't have much in the way of winners in 2022 as exchanges and currencies folded following exchange collapses and an investor pullback. So let's look at the survivors and losers last year and look ahead to this year as well. We've got Yahoo Finance's Jared Blickery here with us in studio. Jared, take it away.
All right, well, let's think about the last few years. We've had some incredible gyrations in the risk markets, and crypto has been really leading the way. So I compared the 2022 returns to the 2021, 2022, and what we have so far this year. Now, 2020 was the beginning of the pandemic. We had that huge bear market in stocks, and you take a look at what happened here. We had a pretty big dip in Bitcoin prices, but then towards the end of the year, we had all the stimulus unleashed by the Federal Reserve and also the fiscal agents of the U.S. and around the world, and we saw this huge rise. Well, that continued in 2021 in this little cyan line here. And in fact, a lot of prices peaked not only in the early year, but in later in the year as well. And so crypto didn't have quite the year, at least most of the tokens didn't have quite the year as 2021, but 2020, but 2021 ended up being a pretty good year. Now, 2022 is when the rubber hit the road. And of course, that was when we got that huge bear market in the U.S. and stocks, and we also had central banks around the world suddenly get hawkish. And here we can see in this orange line, boom, we hit some really low lows. And of course, we know what happened with the FTX bankruptcy. Before that, we had the Celsius fallout. Suffice to say, retail traders really were the big losers last year, in addition to all the people and entities we see in bankruptcy court. Now, take it to 2023. Guess what? This little red line here, let me clear all this noise here. We do have Bitcoin up about 30% for the year and Ethereum up about 20%. So let's take a look at our heat map here and track some of the winners and losers. There you see Ethereum up 23%. Now, if I change this to a one-year view and sort by performance, we're going to see a lot more red than green. And some of these have lost almost all of their value, and some of these we've also taken off the board. But you can see FTT token down 96.5%. What I find remarkable here is we were just talking about the Binance token. We've seen this retain and be very close to its stablecoin value of 1%. We haven't seen that many fluctuations over the last year. So the news apparently not affecting this tape. But some of the winners and losers here, you take a look at Ethereum down 48%, so is Bitcoin over the last year. People might be surprised to learn that Dogecoin is only down 45%. So Dogecoin, the relative outperformer despite its joke inheritance there. And then just taking a look and thinking about who might survive this year, who are the winners going to be? I think it's been shown that Bitcoin and Ethereum are here to stay. We've got some other tokens, Ripple, for instance. I don't know what's going to happen with the SBF favorites like Solana and some of the others. Solana down 78%, but those are going to have a lot more work to do. So it looks like things are improving right now. We do have liquidity flows into the market. We've seen stocks rise this year, but really Bitcoin has been leading the way for stocks. They've been wagging the tail. So whenever we get one of those big announcements, and I'm going to be watching CPI this week, guess what? I'm going to be watching Bitcoin over stocks, guys.
Certainly, we have seen that correlation get a lot tighter between Bitcoin and inflation data. Jared, great stuff there. Well, with the market still looking for a thaw in the crypto winter, let's look at what investors are watching for 2023. Joining us now, two Wall Street and crypto veterans, Caitlin Long, founder and CEO of Custodia Bank, and Jan VanEck, VanEck CEO, and of course, Yahoo Finance's very own David Hollerith. A big welcome to all of you. So first, I want to start with you, Caitlin, because a lot of people, they're seeing, especially this rise that we've seen in Bitcoin. But what does the landscape actually look like right now when we go sort of beyond a lot of the noise of the headlines?
Well, there's certainly a lot of optimism in emerging markets where adoption is propagating both of Bitcoin itself and the Lightning Network, which is a layer 2 solution for small value payments that is propagating at a rate that is greater than the rate of stablecoin growth. And what's interesting about the Lightning Network is any currency in the world can be transacted on that one just simply by locking up the amount of Bitcoin to collateralize it. And so this is essentially a means by which the emerging markets are getting access to US dollars without touching the US banking system. There's a lot of reason for optimism there. However, in the US markets, as you have correctly pointed out, there is a regulatory crackdown underway.
Jan, yeah, and that's a good point. VanEck is a large investor in emerging markets. It also has a Bitcoin price target for $250,000 as of 2028. So with that, I also wanted to point out your outlook for 2023 is that the markets are going to be a bit sideways, mostly for equities has been generally what it sounds like you're saying. So I was curious, thinking about that in retrospect, do you expect Bitcoin's trajectory to follow that of equities as we've seen in the past, or what's your expectations for it this year?
Actually, no, is the short answer. And I would say, yes, that's a long-term price target for Bitcoin. And I derived that really by saying that Bitcoin could achieve half the total market cap of gold. Both gold and Bitcoin really trade against the Fed. So when the Fed is super tight, like it was last year, those are difficult times for both assets. But the reason I'm cautiously optimistic this year for Bitcoin is because at some point the Fed will stop tightening. And we also have the halvening, which is expected in May of 2024. So I think at least in the second half of this year, it will look really rosier for Bitcoin. Now, if I may really quickly, we've had this spurt in the Bitcoin and risk-on assets earlier this year. And our basic thesis is that's come from a surprise increase in global money supply that's happened mainly out of Asia in the last couple of months. And I'm happy to talk about that.
We will come back to that in a moment. Caitlin, I did want to get back to you for a moment, especially considering your platform. You are regulatory compliant. You have transactions across digital assets and traditional financial systems. However, a lot of people who may be looking to get into crypto, they are looking for that insurance that they can kind of count on. And so when you think about the runway or the timeline towards having crypto assets federally insured, what is that kind of base case build in that you and the team think about?
Oh boy, federally insured is not on the table. In fact, it's actually the opposite. And to be clear, Custodia Bank is not yet taking customer deposits. We are building. And with the regulatory environment in the US so fluid, a crackdown started with the White House, the Federal Reserve Board of Governors, and the Kansas City Fed, all on Friday, January 27th, where there was a movement against Custodia Bank to deny our membership application to become a Fed member bank. Subsequent to that, the OCC has taken action. Now, last week, the IRS and the SEC, there's more SEC action coming up this week. So the notion that these assets will ever be federally insured is in fact quite the opposite. There is a crackdown trying to go after stablecoins, trying to debank the industry, and trying to clarify the magnitude of unregistered securities in the industry. We're finally getting clarity, the regulatory clarity that this industry has begged for really since I've been involved, which is more than 10 years now. We're finally getting some clarity from the U.S. regulators. And boy, have there been a lot of activities that have been, shall we say, of questionable legal authority and jurisdiction by the agencies in Washington, D.C.
Yeah, and Caitlin, just to add to that, there's obviously a range of enforcements that have been happening. But if we just focus on Custodia, why do you think the Federal Reserve decided not to allow Custodia to join as a member bank?
Well, it talked publicly about the novel and unprecedented activities, and Custodia has proposed to cut those out of its business plan. Again, everyone's trying to figure out where's the line here. And is the goal of the Biden administration, again, this is White House led, is the goal of the Biden administration to choke off all crypto across the board, period? Or is this really just about stablecoins and unregistered securities? And Custodia Bank, I think, we were the first to be targeted in this wave. It's now clear that the wave is quite broad and quite deep. But the interesting question is, if you look at the wave that's taken place, it's debanking the industry, it's cutting off stablecoins, fiat-backed stablecoins, and it's also clarifying unregistered securities. Custodia fit into those first two buckets, a bank serving the industry, it proposed in our business plan, as well as issuing a U.S. dollar stablecoin-like instrument called AVIT. We have cut that out of our business plan. And so potentially they shot the stallion to scatter the herd, so to speak, as we would say in Wyoming, in part because we actually fit into two of those buckets. The real question at this point for the industry becomes, how far is this debanking wave? Is the goal of the Biden administration to completely debank the industry, in which case the entire thing moves offshore? But because, of course, this is internet native money, it won't go away and people will still continue to use it. Or is the goal really just to go after stablecoins and unregistered securities? If it's the latter, then as this shakeout takes place, there will be, I think, phoenixes emerging from the ashes, so to speak.
And so then, Jan, for retail investors who really saw some heavy losses here, we're also, though, still seeing institutional investors perhaps still taking a different route as we're seeing retail investors pull back. What is the end game here, do you think, for some of these institutional investors when they look at the road ahead right now?
I think institutional investors, frankly, are still licking their wounds after last year, and might be opening their eyes to crypto, but not doing anything meaningfully this year. And I don't even think retail investors have gotten that involved either so far. I think why are we here? We're here. Crypto has the opportunity of cutting the costs of the financial system by maybe 90% to the consumer. And as Caitlin was talking about, overseas, it gives a lot of people who need access to a stable unit of value like the US dollar, access to that if you have a cell phone. And so there's a lot of good end that can bring to users around the world through crypto. But boy, the regulators are really shooting a lot of horses, to use Caitlin's analogy, recently here in the United States. What does that mean? I would add one other observation, which is not only does it move activity offshore, which is the reason FTX was in the Bahamas in the first place, but it is also pushing a movement towards decentralization, away from the types of entities like centralized exchanges that right now have been getting a lot of market share. So that's really moving more towards a decentralized basis, more peer-to-peer, more wallets that the government can control even less.
Thank you so much, both of you, for joining us this morning. Caitlin Long, founder and CEO of Custodia Bank, and Jan VanEck, CEO. Thanks so much. We appreciate the conversation and the time. Coming up next, the race to regulate crypto. After years of sitting on the sidelines, lawmakers in Washington, the capital, they are now demanding a new playbook for crypto. We'll run down what Congress and the feds are working on and how it's going to affect you. We'll be right back. For years, regulators gave crypto a relatively light touch. It's one of the reasons that the crypto market grew so big so quickly, but not anymore. After a series of spectacular flameouts in the past year and many burned investors, it seems everyone in Washington, from the White House to Congress, to the SEC as well, is now proposing a raft of new rules. Yahoo Finance's Jen Schonberger has the details.
The failure of FTX and arrest of Sam Bankman-Fried has heightened lawmakers' resolve to regulate crypto, with members of Congress criticizing the risks.
My fear is that we'll view Sam Bankman-Fried as just one big snake in a crypto Garden of Eden. The fact is, crypto is a garden of snakes.
The Senate Banking Committee kicks things off Tuesday, holding the first hearing on the crypto crash and why safeguards are needed for digital assets. In the wake of FTX's failure, Senator Cynthia Lummis, who co-sponsored the most comprehensive bill to date to regulate crypto, hopes to tackle renewed concerns and tighten the strings on the crypto industry. Senator Elizabeth Warren's next move on crypto is to reintroduce a bill with Republican Senator Roger Marshall to crack down on crypto money laundering.
Crypto has become the preferred tool for terrorists, for ransomware gangs, for drug dealers, and for rogue states that want to launder money.
In the House, Representative French Hill, chair for the Subcommittee on Digital Assets, wants to continue bipartisan progress towards legislation to regulate stablecoins. Also on the docket, what defines a security in crypto land and how crypto firms can be held accountable for violating securities laws. SEC Chair Gary Gensler has warned that if crypto exchanges and lending platforms do not come into compliance, the SEC will take more enforcement action this year.
They can do that appropriately, working with the SEC, or we can continue on the course with more enforcement actions, and I would have to say that the runway is getting shorter.
The SEC has already brought 2 enforcement actions against crypto firms this year, including a lawsuit against Genesis Global Capital and Gemini Trust Company. Outside of Washington, Europe is set to adopt sweeping crypto regulations this spring, while the UK is considering a central bank digital currency, or Bitcoin.
Still ahead, we'll take a closer look at the proposals to regulate crypto and how the new rules promise to protect investors, but still allow the crypto market to innovate and flourish. We'll be right back.
Welcome back to a Yahoo Finance special, Crypto in 2023, brought to you by Intuit TurboTax. Joining us now is former SEC Senior Trial Counsel Howard Fischer, as well as Sultan Meghji, who is the first ever Chief Innovation Officer at the FDIC. Also joining us for this conversation, we've got Yahoo Finance's Jen Schonberger. Let's begin the conversation here in studio. Sultan, thanks so much for taking the time here. First and foremost, when you think about innovation within the FDIC, what does that even entail, especially as it relates to crypto, and what steps still need to be taken at this point?
Absolutely. Well, when I was inside, what we did was really try to think about innovation in 3 ways. One was modernizing the agency. You know, that's an agency where it's a lot of paper and files, and, you know, they didn't even, couldn't use their iPhones correctly back in the day, right? The second is making sure that the FDIC, as the primary bank regulator, was being efficient and using technology to do a better job, especially finding bad behavior in the banking system. Everything from, diversity and equity issues all the way through to terrorist financing. And then the third was trying to foster thoughtful innovation inside of the regulatory context so that we could continue to be the most powerful and most useful banking platform globally. And that included crypto.
Howard, Jennifer Schonberger here. If I could come to you, curious for your reaction on the SEC reportedly suing Paxos on issuing Binance's stablecoin, apparently a violation of securities law as an unregistered security. What implications do you think this has for the regulation of stablecoins and stablecoin issuers?
Yeah, I mean, I think you're seeing a very interesting last 6 months in the crypto world as it relates to the SEC. The SEC has essentially claimed to be the regulator of digital assets, and it's done that not by issuing regulations, but by bringing enforcement actions against Gemini and Genesis, against FTX, against alleged insider traders of Coinbase coins, against Kraken. And now it's threatening to bring a case regarding stable coins. It looks like what the SEC is doing is essentially saying that none of these programs, none of these assets, none of these structures are legal, and they're just going to shut them down. And the way they're going to do that is by arguing that they are securities. And as securities, they need to be registered and regulated. And if they're not, they'll be halted.
So, Sultan, then a lot of people wondering about the rules here, because some institutions like Coinbase saying that it doesn't apply to them, that they don't offer a yield like Kraken does. So then if we're using, say, the Howey test for what is a security, then do some of these exchanges fall outside of that? And should that still be the test that we use to determine what is and isn't a security?
It's a great question, and frankly, you're exactly right. There are a number of situations where crypto is creating products and services that don't sit inside of the legacy regulatory environment. Let's remember, most of the definitions for these things are 30, 40, 50 years old, before digital technology existed. And so, this is a situation where instead of having kind of an open, transparent dialogue that leads to new legislation being created that really defines guardrails, you have a number of agencies. SEC is one of them. The prudential banking regulators, Fed, OCC, and FDIC are others, where they're taking their existing rules and just trying to morph them around this environment in kind of an opaque way. I mean, we've seen it with the SEC over the last few days, and Howard did a great job summarizing that, but also we've seen it with the Federal Reserve and OCC, in essence pushing against people like Custodia Bank, and I saw you had Caitlin on a few minutes ago. Basically they were doing the right thing. They were filling out an application, they were going through the process, and now they're saying, no, you look like X even if you're not X, and we're going to treat you that way. And so it's really, kind of wonder if it's a square peg round hole kind of thing. And right now, since there's no legislation, there's nothing to stop these agencies from using their existing authorities like this.
Howard, building on what Sultan just kind of alluded to there, if we look at the failure of FTX, many of the breakdowns were not all that different from what we saw in the traditional financial sector over the past decades, right? The most egregious of that being using customer accounts to trade for the house, which is what we saw at FTX, something that is barred under traditional broker-dealer rules. So my question is, why isn't it that the SEC is taking enforcement action to require exchanges to register rather than doing one-off securities here and there? I mean, I put that question to Chair Gensler, who puts it back to the exchanges, and the exchanges are pointing back to the SEC. So we have a lot of finger pointing here. Having been a trial lawyer for the SEC, why is this happening? Why aren't we seeing greater enforcement action from the SEC to get these exchanges to register?
I think the metaphor might more appropriately be not finger pointing, but hot potato passing. And with many things, like with many things in our society, it would be really nice if Congress got together and passed a law or a set of laws or structures that governed how the crypto world was going to be dealt with. Unfortunately, they haven't done that, and I'm not sure that there is the political will to do that. And so as a result, the SEC has stepped into the breach, and it's done so by regulating through enforcement, which is perhaps not the most optimal way to do this, but it might be the only available way to do it. And I think, one of the things that we need to think about when we talk about regulation is, what's the purpose of the regulation? Do we want to regulate crypto to protect investors? Do we want to regulate crypto in order to promote the creation of a stable industry? Or do we want to regulate crypto in order to protect the traditional financial services and banking sectors from any potential contagion? I don't think that there is a political agreement as to what the purpose of regulation is and what the purpose of crypto regulation should be. And I think until we get that agreement, we are not likely to see legislative efforts to remedy this. And as long as we have that gap, SEC and other regulators are going to step into the breach by doing enforcement and regulating in that way.
Okay, so Sultan, here's the thing though. We're discussing regulation, but at a lens of U.S. specific authorities, does there need to be a consortium of international regulators that actually come together and recognize the fact that we're dealing with or trying to put some guardrails, at least, around what is a very global type of transactions spectrum that's taking place?
Well, the challenge is there's so many different international bodies all working on this in parallel, and similar to Howard's comment, like what you see in the U.S. is a microcosm of what you're seeing globally, whether it's the European Central Bank or the governments in the Middle East or Bretton Woods or Basel. Everybody's kind of playing in their own little pocket, and no one actually has agreement. Like, just getting people to agree on what a stable coin is by definition is something that they can't do. And so until I think we see some leading nations, and I think a lot of people are looking for the United States to build some clarity around it. We are the most powerful financial services nation in the world. We have 57% of global reserve currency last time I checked. We are the people that everybody's going to follow. And the fact that we can't follow right now is causing a lot of issue. And so you see crypto going into these little dark corners, whether it's bad guy behavior in the Caribbean or whatever. You see it in Malta and places like that. You see the Russians and Iranians creating a gold-backed stablecoin to trade oil in violation of sanctions. This is what's happening to this market because we're pushing it out of the U.S. infrastructure.
Understood. Gentlemen, thank you so much for taking the time here with us today. Former SEC Senior Trial Counsel Howard Fischer, as well as Sultan Meghji, who is the former Federal Deposit Insurance Corporation Chief Innovation Officer, as well as Yahoo's own Jennifer Schonberger. Thanks so much. And up next, everyone, your complete guide to crypto and taxes. Yeah, that. From coins to NFTs, we're going to dig into the new IRS rules and how everyone's tax forms are going to look different this year. Stay with us. We'll be right back.
Welcome back to this Yahoo Finance special Crypto in 2023, brought to you by Intuit TurboTax. Well, tax season is upon us and returns are due at the IRS by April 18th. Now, there are lots of new things to watch for this year, especially for crypto investors. Joining us now is Swan Bitcoin Managing Director Terrence Young. Thank you for being here. So, Terrence, obviously over the past year, we've seen a lot of losses. We've seen some exchanges collapse as well. What do people need to be aware of considering the rule changes as they file for 2023?
Sure. So basically, before the 2023 tax deadline, right, your goal should be to pay the correct amount of taxes to avoid penalties, take advantage of tax benefits, and reduce your audit risk, given that crypto does have a target on its back as you said, Rochelle, with the regulatory action. So I would do a couple things. I would make sure you collect documentation on sales and in crypto investments that went to zero, as many of them did last year when the bubble burst. And I would also download the tax CSV file that you have from places where you purchased your Bitcoin or crypto, and use tax software. Could be TurboTax, could be Bitcoin and crypto tax software such as Zenledger. And then lastly, I would hire an accountant, give them plenty of time to do your taxes, give them good documentation so they do a better job, and think of tax deductions and credits you may qualify for.
Is the IRS's understanding of crypto a moving target here, Terrence, given the fact that there's so many changes year over year, and even the type of ownership that people decide to have in their relationship with crypto?
It certainly looks like it, but us Bitcoiners, of which I am one, we've been warning people for years about how crypto outside of Bitcoin are mostly securities, if not all securities. So for the IRS and other regulators to go after crypto and consider them securities is not a surprise. We hate to say we told you so, but this is something that anybody who has a legal background like I do, or talked to their friends who are securities lawyers, or just went to law school and took a securities law class, this was pretty obvious.
So Terrence, in terms of the mistakes that you tend to see people make when it comes to filing their taxes in regards to crypto, what tends to be the ones that stand out to you?
Sure. So a big one is not taking advantage of tax loss harvesting, where you can make lemonade out of lemons. So 2022, a lot of us saw mark-to-market unrealized losses in our Bitcoin and crypto exposure because many of us bought during the bull market, during the hype in 2021. So what you want to do, ideally, is sell and rebuy your Bitcoin. And in the past, they would have said crypto, but given that the SEC and the IRS are taking a new look, a more aggressive look at crypto and considering them securities, you actually can't rebuy crypto immediately because you would violate the SEC 30-day wash sale rule. Bitcoin is still property under the IRS rules and should continue to be that way. But regardless, if you have losses in Bitcoin, you could sell immediately, rebuy, and lock in that tax benefit by crystallizing and realizing your capital loss.
Terrence, what about for small businesses that may be holding some Bitcoin on the balance sheet? I mean, we talk about publicly traded companies who have some form of crypto. They're holding that as an asset or as an investment. But what about for some of the smaller businesses that might also be hodling, if you will?
I mean, this is not advice, but if I were them, I would continue to hodl or hold their Bitcoin, because long term, if you can afford as a small business to keep your Bitcoin there and not sell it for 5 years or longer, it should do quite well. The longer you can hold it, the more likely it is that this bearer asset that has a credible finite supply will be very valuable in the future. Short term, who knows? As Warren Buffett would say, in the short term, the markets are a voting machine. In the long run, it's a weighing machine. And the weight of Bitcoin's fundamentals are very strong. Crypto, I'm not so sure. I would not hold crypto at all. I would get rid of that.
All right, Swan, Bitcoin Managing Director. Terrence Young, thank you so much for joining us this morning. We appreciate it.
Welcome.
Absolutely. Coming
Thanks
up,
for having me.
Yes, certainly. Coming up, everyone, we speak with the CEO of Grayscale Investments about the current landscape of the crypto industry. You don't want to miss that. Stick around. Welcome back. You're watching a Yahoo Finance special, Crypto in 2023, brought to you by Intuit TurboTax. Joining us now for a deeper dive into the world of cryptocurrency, we've got Grayscale CEO Michael Sonnenshein. Michael, great to have you here with us, as well as Yahoo Finance's Jen Schonberger. Michael, just to start things off, broad strokes here, Crypto 2023, people are wondering, coming off of 2022 and the crypto winter that we've entered into, what 2023 holds. What do you believe is on the horizon?
Well, first of all, it's great to be here. Thanks for having me, guys. I would say that investors are not deterred. What we've seen in crypto over the last couple of months is a tremendous amount of leverage that's come out of the crypto ecosystem. And as we move into the better part of 2023, I think investors are focused on some upcoming catalysts around the crypto ecosystem. There's a major upgrade coming to Ethereum. We're about a little more than a year away from the next Bitcoin halving. And certainly today, I'm joining you from Washington. There's a lot of conversation going on around crypto in Washington with recent events, certainly not deterring policymakers, but instead, perhaps we see 2023 as a year where regulation becomes front and center for crypto.
We will get to that regulation for certain, as our own Jen Schonberger covers Washington very closely here. But Michael, I got to wonder, for Grayscale specifically, how do you look at these next 6 to 12 months and how critical they could be?
There's no question that the entire resources of the firm are focused on our lawsuit right now. So for those of you who are just tuning in, Grayscale sponsors the world's largest Bitcoin fund, Grayscale Bitcoin Trust, ticker GBTC. And we have been working proactively to convert GBTC into a spot-based Bitcoin ETF here in the US. And the SEC denied GBTC's conversion in June of 2022. And since that time, we've been in active litigation with the SEC. And so the case is proceeding swiftly, and the oral arguments will be heard at the beginning of March. And we could have a decision on the case as soon as the fall of 2023. So squarely focused on our litigation there, and really, again, protecting our investors and doing what's right by them.
Hey, Michael, Jennifer Schonberger here. It's great to see you. On those oral arguments that are set for March 7th here in Washington, what can we expect? What do you plan to argue? What's your case?
Well, the SEC really has taken a stance that is what we think arbitrary and capricious. They allowed Bitcoin futures-based ETFs into the market and have continued to deny spot-based Bitcoin ETFs from coming to the market. Ultimately, we have straightforward, common sense legal arguments that we believe the court will be persuaded by, and feel that, when we think about recent events in crypto, we have to think about protecting investors, continuing to give them full and fair disclosure. And there's certainly no question that moving to a spot-based ETF would certainly give investors greater protection, greater regulatory oversight, and again, very confident in our arguments as we head towards oral arguments in early March.
Michael, if you don't get the outcome that you hope for with this lawsuit, I know you've proposed a possible plan B where you could tender 20% of the shares outstanding. That would require a conversation with the Securities and Exchange Commission for a more customized plan to adhere to legal requirements. Have you spoken with the SEC to try to lay the groundwork for that if you don't get the outcome that you want on this lawsuit?
That's exactly right. So earlier in this year, we did announce the possibility of a tender offer if we do exhaust all of our legal options in contesting the SEC's decision around GBTC converting to an ETF. In order to facilitate a tender offer, we would certainly need shareholder approval, but would also have to work proactively with the SEC to obtain relief from the tender offer rules. Unfortunately, I have to say that reaching a tender offer would be a less optimal outcome. The most optimal product structure here is a spot-based ETF. It would allow the product to track the Bitcoin that it owns day to day, the way that all ETFs have that embedded arbitrage mechanism. And again, would really give investors greater oversight and protection, sitting on a national securities exchange. So if we did end up in a scenario where we were pursuing a tender offer, it would really mean, solidify that the SEC and the regulatory community here in the US was continuing to shut the door on bringing Bitcoin, even closer into the regulatory perimeter.
Michael, how have the SEC proceedings impacted fund flows right now?
I'd say that investors are generally in it for the long haul. Grayscale investors really are folks that have long-term conviction in crypto, and we fortunately have investors across all 50 states. This includes retail investors, this includes institutional investors, and typically what we see is when we're in these range-bound times, investors typically are slow to allocate, and as soon as they see crypto beginning to break out, they begin to dollar cost average back into those positions.
Michael, you're a subsidiary of the Digital Currency Group, which is also the parent company for Genesis Global Capital, which recently filed for bankruptcy in the wake of FTX's failure. DCG is reportedly selling large positions in several crypto trusts that are operated by Grayscale at a deep discount to try to raise money to pay back creditors. What can you tell us about this, and what sorts of further ripples could we see as a result of this bankruptcy pop-up?
It'd be really difficult to comment on the specifics of what's happening with Digital Currency Group, since it's not the business that I'm responsible for day to day. What I can share is what's out there in the public around DCG, which is that as a company that invests in private companies, that holds tokens, that invests in Grayscale products, that incubates businesses, DCG is reportedly selling some positions in some of the Grayscale products that it owns, really as part of its regular portfolio rebalancing. But beyond that, I'm not how much more to make of DCG's recent sales.
Michael, I don't mean to be grim here, but for a lot of the companies in the crypto landscape, the management teams have had to try and figure out, how do we get to the other side of this crypto winter? How do you approach that at Grayscale?
It's a great question, Brad. We've been really principled and really deliberate in building the Grayscale business. I have a phenomenal leadership team. I have a phenomenal organization that has continued to focus on all the tasks in front of us as a team and never getting distracted by headlines. We have been a lean and mean organization that's really been focusing on building the foundational infrastructure of the business. So our own broker-dealer, our own registered investment advisor, and really continuing to operationalize Grayscale that will allow it to scale for its future growth. We're an organization that did not get out over its skis. We didn't take on leverage. We didn't get too large as a company. And we've been through 2 crypto winters before, and we're weathering this crypto winter as well.
And Mike, 1 second. Have you had to also reduce headcount, restructure costs anywhere?
We're always being cost conscious. So when we think about our service providers and any of the other organizations that we're aligned with, we're always doing things in a way that gives us optionality so that we're never overcommitted as an organization. And I think having that agility has been really, really key to Grayscale's long-term success.
Michael, we always appreciate getting some time with you, always appreciate the time, the perspective, and the analysis, as well as what the future holds for crypto. Michael Sonnenshein, Grayscale CEO, thanks for the time today, as well as Yahoo Finance's Jen Schonberger.
Thank you, guys.
And you can check out the full interview with Grayscale CEO Michael Sonnenshein over at the Yahoo Finance homepage. Coming up next, Beyond Bitcoin here. The big change is coming to our lives as we move towards blockchain technology.
Cryptocurrencies and blockchain technology are setting the stage for a new era in personal finance, digital payments, and all sorts of financial transactions. But it's also going way beyond that. Joining us now to explore the promise of blockchain and how it will change our lives is Algorand Foundation CEO Staci Warden. Thank you for joining us this morning. So for a lot of people who are wondering, I know you have a pure proof of stake approach with Algorand here. What does that mean, though, for the average person who's trying to understand how blockchain could be working in their lives and in their businesses?
Yeah, we're a layer one blockchain, which means we provide the underlying layer for all kinds of people to build on top of us. So we don't build specific applications. We enable applications to be built on top of us. And we have a very efficient blockchain with a very low carbon footprint. We were founded by Silvio Macaulay, who is maybe the world's most famous cryptographer, living cryptographer. He's a Turing Award winner, tenure professor at MIT, the whole bit. And our blockchain uses a pure proof of stake consensus mechanism, which enables it to be very decentralized and also very fast. So we do about 6,000 transactions per second, moving to 10,000 transactions per second this year at a very low cost. So it's a sub-penny transaction fee and a very light carbon footprint. So we use, and again, it's our consensus mechanism that enables us to do this, but we use the energy of about a small neighborhood, and we buy carbon offsets to make sure that we're always carbon negative.
How will people, Staci, realize the difference, the delta in their day-to-day experience when blockchain truly is part of that experience? And what will the benefit be?
Yeah, I mean, I think of the big five, and the number one is always going to be payments and smart payments. And, you know, right now, if somebody in Brazil wants to send somebody in France a movie, they can do that in 1 minute over WhatsApp, a movie. But if somebody in Brazil wants to send somebody in France $10, you know, it has to travel through the correspondent banking system of the US, clear at the Fed, somebody takes between 6 and 8% off the top, and it might get there, 4 days later. And the fundamental value proposition of a blockchain is actually that currency doesn't move at all. It's that it's one ledger. The history of financial transactions has been really for the last 10 years that each bank has a balance sheet, and the messaging between those balance sheets has gotten better and more efficient and cheaper. But a blockchain is a completely different animal. It's one ledger. So that transaction between, say, Brazil and France will happen immediately. It'll happen in 3.9 seconds on Algorand. No forking, final settlement, not reversed. And that is just a huge fundamental thing to understand about blockchain. And then in addition, there's things that you can do on blockchain, like marshal identity. You can do tracing of goods. So for supply chain, you can have a more democratic governance system, and you can do tokenization of real world assets. So there's, I call those the big five, and I can talk about each one of them. But I think the important thing to understand is that it's one ledger that everybody writes to. And of course, if it's one ledger, you can't have one entity control that ledger. It has to be decentralized, because if one computer gets attacked, it has to be able to live in a healthy manner on all of the other computers.
And I want to ask you, because obviously we've seen generative AI front and center. How do you see that playing into perhaps the speed and reducing costs of things on blockchain?
Well, I don't know that AI has a lot to do directly with blockchain, but for the apps that sit on top of blockchain, for sure, you can imagine AI kind of optimization of protocols, for example, and of course the messaging and the communication between AI type bots and the user interface, I think could have a much better user experience. But, the idea of a blockchain is that, transactions are entered and then they are immutable. So a blockchain is not about truth so much, but it is about integrity. And so that when something is entered, nobody else can mess around with it. And that turns out to have very important implications for all kinds of things.
Indeed. Well, we do appreciate you joining us this morning. Algorand Foundation CEO Staci Warden, thank you for joining us this morning.
Okay, thanks for having me.
Well, that wraps it up for our crypto special today. I mean, we've covered everything from regulation to tax loopholes, stablecoins, and of course, where the blockchain ecosystem takes us next. I'm Rochelle Cooper along with Brad Smith. Brad, any final words here in terms of what you found the most interesting today?
You know, I just continue to take a look at the price action on Bitcoin, quite frankly, and try to get a sense of where we go from here and the levels that we've got to break through. I know Bruno Mars wrote the song 24 Karat Magic, but that 24K is going to be an interesting marker, a breakthrough point, as we've seen some resistance there. We'll see if Bitcoin is able to break through that and have the hot crypto summer, or lead it, as we had teased earlier on in the hour.
I'll certainly be keeping an eye on that regulation by enforcement path that we seem to still see the SEC going on. Well, that'll do it for us. But of course, everyone, please stay tuned for live coverage between 3 and 5 p.m. Eastern Time, where we'll look ahead to a big retail sales report with MasterCard's Michelle Meyer. You don't want to miss it. Goodbye for now.